Another week, another trading cycles video. We are now in week 24 of 2023. Before we continue here, I would like to preface the video like I always do by reminding you that you should keep in mind we do not provide financial advice. All the content that we share is intended for educational purposes only. Always trade to price and not to prediction. How are we doing, Gormas?
We are doing absolutely fine. Yes, thank you. Obviously, we can see that markets are doing absolutely fine as well. And that was a big story last week as well, that we are finally out of the bear market territory. So the final one to come out of that was S&P 500 index, and now apparently the bear market is over, which is great. And we can see the strength still continuing even today. Markets are pushing higher from here, and obviously that resistance line that we thought that might hold has been now broken. It might be just a fake out, but only time will tell. So we are a bit cautious. We will go through those details in a moment. But yes, the markets are quite positive at this point. Today, which is Monday, the 12th, we are at another turning point here on US markets. So basically, there might be something starting from tomorrow, and as we know, Tuesdays are usually the major turning points on the markets. So just be cautious there. All right. And also midweek, well, tomorrow and Wednesday, there is another Fed meeting in regards to the rate decision as well. And that should be announced on Wednesday. What the next rate decision is going to be. Basically, the market is anticipating that Fed is not going to raise rates this time, but there is an overall consensus that there might be another raise coming in July's meeting. So we'll just have to wait and see how it's going to be. But well, in my opinion, if Fed keeps raising rates at this point, they must have some sort of agenda there, which we are not really aware of, because all the signs on the markets seems to be under control, at least in US. But it might be just our fiction. I don't know. But yeah, obviously Fed is usually a bit behind with their reactions there to the market conditions, because the data is coming in a bit late, lagging there. Okay. But yeah, it might break something, so that's why we are a bit cautious here. But at the moment, everything looks good, yeah. So that's okay. Now looking into gold market, we are kind of bullish here a bit, yeah. So that low that we had in end of May has been holding, so we haven't had any lower lows so far, and we expect that the market will continue raising from here. Obviously, today is another turning point on gold market as well, yeah. And Bitcoin is sliding there slowly but steadily, and that has been anticipated already or quite a while ago. So we did draw this line back in, I don't know, April, May, sometime, yeah. And it's been following that tendency quite closely. So that might be over not sooner than 21st of June, but possibly after 30th of June. All right. So, and 50-day moving average of the broad market is now reaching almost 70% area here. So it might be happening after today. So we don't know what it's going to be then, but possibly it might reach that green area here, which is indicating that the market might be having another turn there, yeah. Although it might take sometimes a couple of weeks or up to a month to roll over from here, but we shall see how it's going to go. Now, yield curve is still in steep, basically, it's mirrored, yeah, basically. So that doesn't look good. So that's no changes there. And VIX is very positive so far, and as we have already mentioned earlier, usually when it gets so low, the market tends to turn quite soon. So these are the signs at the moment that we are still anticipating market turns, but when or how it's going to play out, we shall see. Obviously, Wednesday is the main concern at the moment, or possibly tomorrow already, if there's going to be some news on the market that might scare the participants there. Yeah. Okay. Now, something I wanted to cover as well, because we have had some questions in regards the seasonality of the markets, and just to clarify it a bit, Eric, do you understand what seasonality is or how it works?
Yeah, I have some idea of what it is exactly, but I would like you to go over it so our viewers and listeners can get a better understanding of it as well, and kind of get it from the horse's mouth, so to say. My understanding might be a bit off, or not as fleshed out.
Yeah, exactly. Well, let's cover it a bit here as well, because obviously seasonality tends to be quite important part of the cyclical analysis, and we have seasonality of the broad market, like S&P 500 or Dow Jones even has their own seasonality, but the main things that are quite clear are that April tends to be a very strong market, and then May, June are usually quite low interest on the market, because the summertime is anyway quite quiet on these markets. And when they are coming back, usually after the second quarter announcements, so July, August tend to be strong again. Then September tends to be weak, and from October till December or even January, the market tends to be strong. So this is the broad market seasonality, and that's how it is usually playing out. Obviously, you can look back years or even tens of years, and you can see the same pattern going on there. And obviously there are some exemptions, like some years do not follow it. But even last year, when we had strong decline on the market, we still had July seasonality, and we had since October till November, December, we had very strong market. Yeah, so these are still visible even on the bear markets. Okay, and it basically the seasonality was firstly quite visible and understandable from commodity markets, so basically grains and livestock and so on. That there were more demand at some points of time, and obviously the market was then rising, and obviously when the demand disappeared, then the markets were falling. So there is clear pattern on these markets. Obviously with stocks it's a bit difficult, yeah. So it's not always the same, but still there are some patterns that you can quite clearly see if you look into them. And for example, there is a stock that we followed quite closely beforehand, before this seasonal rise took place here. So basically we knew it beforehand, because that stock DXCM is one of the strong seasonal stocks for June. Okay, and when we did our analyze for that stock, I will show it here as well. So basically, yes, the price was then known up until the end of April, and we knew that somewhere in the second half of May there should be a tendency for this stock to rise, as we have those seasonal lines here and we have our cyclical analysis here. So basically both of them showed that the market should be starting to rise, and the peak was actually today, 12th of June. Yeah. So, and we already saw what the stock did. Yeah. So basically it did start rising from 25th. That was the low, and today was the high of that market. Yeah. So that's basically how it works. You can pinpoint it out quite easily, and now during those 2 weeks, or a bit more than 2 weeks, yeah, basically we gained on this market more than 12%. Yeah, so basically not bad at all. So yeah, that's how you can take advantage of the seasonality. And obviously, when we know that the broad market has seasonal tendencies either to decline or rise, then we are basically setting up our trades as well in suitable direction. So we wouldn't want to go against the seasonality in that sense. And yeah, that's gonna give you the headwind, obviously. Not the headwind. So just to understand, go with the flow, yeah, and not against the flow. All right. I hope that that explains the seasonality a bit, how to use it and what it is. All right.
Definitely clarified things for me, at least. So hopefully it clarified things for the viewers as well. And if you have any questions, any further questions here, leave those in the comments. We will definitely try and incorporate those into our next video as well.
Yes, indeed. And I think it's time to wrap it up for this week. So I'll wish you a good trading week, and obviously be cautious in the middle of the week when the next rate decision is coming out. All right. All
right. Thank you very much for watching and listening. As always, if you haven't already, click that subscribe button. I don't know what you're doing watching the video this late and you still haven't subscribed. If you're already subscribed, click that bell notification icon if you haven't already, as well as if you like this video, if you like the content we make, like it, as well as share it with your friends, your family, your neighbors, the squirrel that lives in the tree in your backyard. Share the video with them. And as mentioned briefly a few moments ago, if you have any questions or ideas, leave those in the comment section. That's what it's for. But that's it from me. I wish you a really nice week, and we shall see you in the next video. Bye bye.
Bye bye. See you next week.